SBA loans are some of the best products that you can get for your business, but you have to know what they're looking for, how to set yourself up to win, and more importantly, how to position your business in a way that actually makes SBA funding attractive to you. And so in this video, I want to break down more so how we think through SBA funding with our clients and how we set them up to win so that they can get access to this kind of capital. At the top is, and I can't believe that I have to say this, but know your numbers. And I know that some people are watching this video, they're saying, Irv, I know my numbers. No. Like, really know your numbers. KYN. Matter of fact, in the banking world, they have something called KYN, which is know your numbers, and KYC, which is know your customer. And I'm constantly harping on this with our clients because lenders will ask you about your revenue, profit, expenses, and debt, and they expect you to have those answers quickly. Meaning, how well do you know your COGS? So your cost of goods sold. How well do you know your payroll? If you have a team that you're paying out, how well do you know your expenses, your debt schedules? If you are just starting out, then you at least want to have the right projections as to what you think. And again, this is more for microloans, right? If you're talking about a 7A loan, then you want to know what I'm dialing in right now, because this is going to be, or this is essentially the most common type of SBA loan that you get. And then you have your microloans, which is a bit more for starters. So people that are under maybe 2 years of business, but the cap on that is 50K. Anyways, I digress. The reason why I say if you're just starting out, know your numbers regardless is because if you get into an industry, you at least want to know what that industry generates within the first 12 to, let's say, 36 months of you being in business. If you at least are able to articulate that to the SBA or to an SBA partner when you are submitting your file to that bank or to that credit union, then the odds of you getting approved for SBA is going to be dramatically higher. So you should know your monthly revenue, net income, and how much you're requesting and why. That's a big one. And you know, it's interesting because whenever I am talking to someone or somebody on my team is maybe connecting with someone on a consult when we are maybe thinking of bringing them on as a client, or if we just flat out say, hey, we can't work with you, the same way that the SBA is going to reject your application is kind of the same model that we run whenever we just tell a client or a potential prospect, hey, we can't help you out. Here's why. If we're talking to someone and we say, hey, how much capital are you looking for? And people usually say, when they aren't as experienced, as much as I can get. That's like, that just repels funding. Like, you have no idea. Saying as much as I can get is not going to get you a big amount. In fact, it's going to make you look like an amateur, and it actually lowers your status. So something that I found that's quite interesting is people who typically don't know how to run a business, or if they've never actually used business credit before in their business, usually say that. And typically whenever I hear as much as I can get, 9 times out of 10, I say this person doesn't run a legitimate business, or this person is so used to being denied that they just know I'm probably not going to get approved or anything. So let me just say this answer. The inverse of that, though, has also been true, which is when somebody, again, we start working with and we are helping them present their file to the SBA, and they say, Irv, if I can get 70 to 80K, again, I know that it's not guaranteed, but if I can get 70 to 80K within the next, let's say 60 to 90 days, I'll be good. Even if I can get half of that, just because I know where it's going. It's going to go toward new inventory. It's going to go toward a new building that we're looking to acquire. It's going to go toward this business. Here are the numbers. I've ran everything on my spreadsheet. Like, it's right here in front of me. Those are the type of business owners that end up getting approved for the capital that they're looking for because they're dialed in and they're able to articulate it properly. Number 2 is you want to leverage your credit. Most SBA loans, you're going to need a 650 credit score or higher on the personal side to unlock SBA funding. Now, business credit matters too. It's not a absolute necessity if you are maybe going for a microloan, but as we are venturing into scale land, which is how we start to grow business capital on the SBA side, you want to have your FICO SBSS score dialed in. And this is a blend between your personal credit score and your business credit score. And so that ranges between 1 and 300. Now, you want to be at least a 150 or higher. Again, if your goal is to get above 50K or more in SBA type of products. Now, the biggest needle mover, if you don't have a FICO SBSS just yet. So let's say that you've been writing your business off of maybe one or two business credit cards, but your revenue is pretty solid, and you structured your business properly, and you, let's say, been in business for 3-4 years, what have you. Your personal credit score, in line with how your business is structured and a couple of other metrics we're going to cover here, will help you, again, secure that capital. But if you don't have, let's say, the best credit, but you have the revenue, but you have the FICO SBSS that's above a 150, you see how now you can start to kind of pendulum swing a little bit, and you can start to use maybe the gaps. And this is what I talk to a lot of also with our clients, is we can start to fill in the gaps with what's missing on one side. So if we don't have maybe the strongest credit, how's our revenue? If we don't have the strongest revenue, how's our FICO SBSS score? And so what ends up happening is we end up painting a better picture so that we are able to acquire what's needed. Clear use of funds, I hinted at it earlier, but I want to swing this back around. Just needing cash is like, it isn't good enough. And as much as I can get, that's repellent language. Come in with a clear definition of what you need and what it's going to be used for. Be specific. Let me give you an example. $80,000 for equipment, $50,000 for payroll, $20,000 to refinance maybe some existing debt because it's going to be cheaper money if you're using an SBA product. The more precise your plan, the safer the lender feels. So a lender in this case is going to be a lender backed by the SBA, which would be a bank, a bank or a credit union. Those typically financial institutions that are partnered with the SBA. The other thing that I wanted to mention is you don't just want to apply just anywhere. Not every lender handles SBA loans well, especially if you're just dealing with big banks, because what ends up happening is that they want to promote more of their products internally, of what they have more control over. The way that it works with SBA is SBA isn't actually lending you the capital. They are essentially backing the bank. So they'll typically do 70 to 80% backing to that bank or to financial institutions. So an example of this is you get approved for $100K SBA loan, and SBA essentially is on the hook $80K. If you default, God forbids, they tell the bank, hey, don't worry, we got you covered. We'll go out and we'll try to recoup the debt. They're only on the hook for $20K. So they are going to come after that business owner or that business, God forbid they default, for the other $20K. This is why some banks and, again, some financial institutions don't necessarily like or do the best work with SBAs because of that. But again, if you're structured properly and if you know what you're looking for, then this could be an advantage for you, because while other people are saying, well, SBAs are too hard to get, or it takes way too long to fulfill, that's because they're probably not looking at the right areas. So you want to work with an SBA preferred lender, which we help our clients get partnered with here inside of our community, inside of our program, and someone who actually knows the SBA process inside and out, because not all banks or business bankers are created equal. And I think that if you've been involved in the business realm, then you probably know that just by talking to a few business bankers. This is why I constantly harp to my clients, don't just submit your file to the first business banker you sit down with. The same way that they're interviewing you, you also want to interview them. Your approval timeline depends on the lender's experience. Number 5 is get your docs in order. So let's put actual context around that. Minimum, the last 2 years of personal and business tax returns, business licenses, and financials. You also want to prep for profit and loss, balance sheets, PFS, which are personal financial statements, and a business plan if you're a startup. If you're an experienced business owner, one of the best things that you can do is flex your cash flow, flex your revenue in tandem, meaning together, with your strong personal credit profile. The trifecta in this case is going to be, if we have revenue, we have strong personal credit, and then we also help a client build out their FICO SBSS score by adding the proper accounts that are actually going to report, and now they're above a 150. That is the holy grail. At that point, you have a strong file. But I know that we have a lot of startups that watch this channel. You're under a year, maybe you're pre-revenue. you at least want to have your personal credit dialed in. Nothing less than a 650. I would venture to say the higher into the sevens, the better it's going to be for you. And then the last piece, and this is going to be for all of us, by the way, but especially if you're a startup, is you want to have what they call an SBA approved business plan. The SBA isn't going to approve just any business plan. They're looking for specific data on essentially market research, the type of industry that you're involved in, the type of customer or clients that you're going to be serving, the business model as a whole, and they want to see how it's articulated in that business plan. It's going to be a driving force if you don't have a lot of revenue just yet, but you have the credit. The business plan is your way of articulating, I am a serious business owner. Now, I made a full video breaking down how to set it up using AI. You can go ahead and watch that video right here.